In the current stock market, we are seeing a trend that the headline risk drives share price. News headlines are causing big sell-off as well as stock overbought. For example, on August 11, 2021, the Wall Street Journal and the Financial Times reported that SoftBank Group Chairman and CEO, Masayoshi Son, revealed plans to halt investments in China until the impact of new rules planned as part of a crackdown on tech companies in the nation becomes clear. The news resulted in systemic selling by global shareholders on Alibaba stock. Its 12-month returns are down by -45.70%. The stock closed at $144.20 per share on October 1, 2021. With the price of $144.20 per share, the stock is now oversold and undervalued. However, many investors are staying away from Chinese stocks now, as concerns over China's private sector crackdown. Will Baba get delisted? Could your Baba stocks be left with nothing? Well, these are real risks that investors must account for. The price of Baba stock in future will depend on what happens next. With all these uncertainties, it is hard for investors to make decisions on Chinese stocks. But some investors are also worried they could have missed a great opportunity. In today's video, I will give my personal opinion on Alibaba stock. However, due to the huge uncertainty and high risk on Chinese stocks, I would like to emphasize that the contents of this video is purely my personal view. If any viewer would like to invest in any Chinese stocks, this will be purely viewer's personal decision. The contents of this video is purely for information and entertainment only. Fundamentally, Alibaba is a great company. Many investors are still like the stocks. This can be proven by the stock price still holding at $140 level after so much negative news. Currently Alibaba stocks are 27.89% held by institutions. We also see an increase in the number of hedge funds holding Alibaba stocks in the first half of 2021. The stock was in 146 hedge fund portfolios, up 11 from the previous quarter. However, individual investors should not follow what hedge funds are doing, because Alibaba stock still has the possibility of delisting and continue underperforming if there is more negative news from the Chinese government's actions. So, what will happen if Alibaba stock gets delisted from the US stock exchange, and how could investors mitigate such risk? On September 22, the U.S. audit watchdog adopted a new rule which will help the board force companies flouting U.S. audit regulations to delist from U.S. exchanges. This move threatens hundreds of Chinese businesses listed on U.S. stock exchanges. In the past, Chinese firms have been exempted from being audited due to state secrecy laws. This is definitely a risk to Alibaba stock. However, even if Alibaba was delisted from the US exchanges, the stock could still trade over the counter or on other exchanges, like Hong Kong Stock Exchange. The stock will not be completely left with nothing, but its valuation will be affected. The Ant Financial issue is worth discussing as it does impact Alibaba's future valuation. Ant Financial is a subsidiary of Alibaba. Alibaba relied heavily on Ant Financial to provide its shoppers with unsecured credit, which is the most lucrative business. In fear of potential contribution in the Chinese markets to systematic risk, Chinese regulators ordered Ant Financial to split Alipay into an independent app, and require Ant Financial to turn over user data underpinning loan decisions to a new credit scoring joint venture that would be partly state-owned. This new venture will apply for a consumer credit scoring license, which Ant Financial has long wished for. China's central bank has issued only 3 licenses, those obtained are all state-run operations. Such an arrangement will prevent Ant Financial from fully monetizing the vast reams of data it has collected on Chinese citizens. Currently the process of credit check is entirely integrated within Alipay, and Ant Financial said it made credit decisions within seconds. When this process transfers to the new venture in future, the assessment is first routed to the new joint venture credit scoring company before the lending app to issue the credit. Unsecured short-term lending market in China is still huge, hence the future of Ant Financial is still optimistic, However, its profitability will not be as high as before, and the possibility of future overseas market expansion will be slower or limited. Alibaba is planning to follow in the footsteps of Amazon and have its cloud computing business surpass its retail origins. Its cloud computing segment in particular experienced 29% revenue growth according to its second quarter earnings. The cloud computing segment is a potential growth driver in earnings because it is the closest to profitability among Baba's non-core businesses. Alibaba's success in cloud computing is a positive sign that the company will evolve its non-core business segments to the point where they are profitable. Cloud computing has been a major driver of earnings for large tech companies, particularly Amazon and Microsoft, hence this segment will be important for Alibaba's future growth. The regulatory scrutiny is not particularly focused on the cloud computing sector, and the demand for digital transformation, artificial intelligence, and smart industries remains firm. China's cloud infrastructure market size is estimated to be $6.6 billion in the second quarter of 2021, an increase of 54% compared to previous year. The Chinese data security law that started to go into effect in early September for protecting critical data related to national security and issued draft guidelines on regulating the algorithms companies definitely will impact Alibaba's cloud segment growth and its profitability. In order to ensure full compliance with the data security law, Alibaba's operation costs will increase and impact its cloud segment's bottom line. The Chinese government would like to secure better and more competitive data, and at the same time try to prevent private sector's data access by improper users. The regulators tighten up the potential for random, unsupervised use of data. As Alibaba owns the largest data source in China due to its size of business, the data governance could slow down Alibaba rivals' data business and let Alibaba continue strengthening its ability on targeted marketing. This could help Alibaba to yield better long-term business success. Alibaba had businesses that provided brands and products that consumers believed they cannot do without and could only obtain through Alibaba's entities. Hence, Alibaba plays an important role in China's economy. The Chinese government will not want to hurt Alibaba but rather to regulate the company and make use of Alibaba to benefit China more. The only concern is investors' benefits may not be seen as important as before, such as pushing common prosperity to narrow a yawning wealth gap that threatens the country's economic ascent and the legitimacy of Communist Party rule. Alibaba had a rock-solid balance sheet with nearly $71 billion in cash and short-term securities within the company. It has also invested heavily in new ventures, independent, digitally disruptive startup companies within China and outside of China. Such investments could bring high growth and profitability to Alibaba in future. In conclusion, Alibaba still has a bright future. In the short term, the crackdown of Chinese regulators will hurt its profitability. However, I believe Alibaba will recover very soon once the Chinese regulators' direction becomes clearer. It is high risk to invest in Alibaba stock now. If your investment risk tolerance is not high, it will be better to stay away from the stock. High return investment is always associated with high risk. Once you understand the risks that you are going to take, it is much easier for you to make the decision. I will stop here. Hope you enjoyed the video, and thanks for watching through the end. Those who liked this video and who also liked my previous videos, thank you so much, folks. Those who already subscribed to the channel, thank you very much for your support. Those who prefer not to like any video nor subscribe to any channel, thanks for clicking. I am Max from Market Pulse Studio. Have a nice day and thank you.